He's the man Morningstar just named the top stock picker in America for 2011, the #1 guy. He is, of course, Jim Kieffer. He is the lead manager of the Artisan Value Fund. He is right here to share his picks for 2012. Jim, great to have you in the house.
It's great to be here.
And congratulations. A lot of guys were vying for that, but let me ask you right off the bat, 2012. Is it going to be different than 2011, or is it more the same?
No, it's definitely going to be different, but who knows what that difference is going to be. We know at the beginning point that there's attractive valuations, particularly in the mega cap valuation, mega cap stock world, so prospects look interesting from that, but who knows what happens with the economy and the markets.
All right, let's get right to your picks. You've got a couple of them. I know that's what guys want to hear from. Progressive, one of your top picks.
Progressive, an auto insurer that has been around for many years, but certainly has become more known to the general population over the past few years with their Flo ad campaign.
There she is.
There she is, exactly.
Lovable Flo.
And it's been very effective. This is a growth company that has always been a growth company. It's kind of been in disguise a little bit from an earnings perspective of late, having over-earned in the past and with some of this expenditures in the campaign. But terrific unit growth, great market position, and a company that we think will once again gain a cult following once the stars align from a growth perspective.
Now let me ask you, Chubb and Ace are both cheaper than Progressive, so why Progressive?
We do own Chubb, actually. We don't own Ace. Chubb, Progressive, I think, was a different franchise. Auto franchise is kind of different from the other insurance operations where there's definitely a bigger risk phenomenon there, more of a book value phenomenon. This is more of an outright earnings phenomenon. Other than Geico, I think this is the best auto insurer in America.
Okay. The best auto insurer in America as picked by the best stock picker in America. Avnet, another one of your picks. Talk to us about Avnet.
Avnet Aero, IT distribution. Think of it everything from chips to servers. And so
one-stop shopping for tech, hardware.
Think of it as the flow for IT goods. If there's demand for tech is high, Avnet's going to do well. When demand is weaker, it's going to do weaker. But it's a great participant in that industry, selling at single-digit PE, terrific ROE, terrific cash generation, and so it participates in the flow of tech without the risk of tech.
Is this a lead indicator or a coincident indicator?
It trades somewhat like a lead indicator. Trades some correlation to the stocks index.
Guys want to get involved before the
You do see a lot of that, and
that's
been the great part for us. We've owned this name for a decade, really, in different forms, and there's a lot of volatility that comes around it as people want to place their near-term bets on what they think will next happen to the semi-cycle or tech spending cycle. We've been able to take advantage of that, get involved to these low valuations. When sentiment picks up, we start backing away from it.
Yeah, trading right now at about 8 times earnings.
Very modest valuation at the moment.
And historically trades?
It'll trade anywhere from, call it 8 to 12, right around there.
So it's at the low end?
It depends. The earnings are a little higher at the moment. But
and
yeah.
Let me ask you, a lot of guys come on our show and they like services as opposed to hardware. This is more of a hardware play. Why hardware for you?
Why?
Yeah, why do you choose to go with hardware?
Well, we also own services companies. We own a lot of tech. We just think this is a very attractive business at the right price. So that works for us more than anything else. I don't think you need to have a bias one way or the other. When across our portfolio, we really do have both kinds of names.
Cheap is cheap, especially when you have growth.
Yes.
All right, another one. Hatteras Financial, a mortgage real estate investment trust.
Yeah, a little bit of different device here. I call it a yield manufacturing device more than anything else. This is
cash flow generator.
They own mortgage-backed securities, and it's a REIT, so they pay it out. Their earnings out through a dividend. That dividend right now is in the teens. It sells for close to the book value. Think of it as a play. I hate to use the word play, but as a play to some extent on the steepness of the yield curve and low rates for a long time. That it'll generate a nice spread from mortgage-backed securities.
And by the way, you want the yield curve to be steep. In other words, the near term to be very low rates, and as you go out 10, 20, 30 years, you want that to be higher rates so that measures their profitability,
yeah,
margins.
I'm not going to kid anybody. There's interest rate risk. There's not credit risk, but there is certainly interest rate risk, and you don't get something for nothing, so that's part of the risk that's there. Now, fortunately, the management of Hatteras is conservative, and they position themselves as well with the idea that rates may rise. So you've got adjustable rate mortgages here. You've got to focus on liability management as well. Tricky interest rate environment will be tricky for the company, but again, selling near book value, the asking price is right.
Any sectors or groups you want to avoid in 2012?
Nothing's ever off limits. We have an open mind. We're flexible and willing to look at anything and everything. So I can't declare anything as necessarily off limits. It just depends what the market serves up at any point in time.
Does Europe, at this point, matter less to the U.S. than it did 6 months ago?
No, I think you still have the risk of a disruption in Europe can cause some serious disruptions here. We're not good macro investors, but that's clearly an evident risk that should things tumble apart in Europe, it's going to cause some serious issues here.
All right, Jim Kieffer, #1 stock picker in America, as rated by Morningstar, co-portfolio manager of the Artisan Value Fund.
Correct.
Thanks for joining us. Great to have your picks.